All right, what is up, everybody? Give me just a moment here. Need to see this green light. There we go. Receiving my content. All right, we will jump into this video in just a moment. There we go. All right. So I know this is a bit blurry. It'll clear up. Don't worry about it. So this video is going to be on the morning breakout. So let me press play here. Get this quality up to more than 480. There we go. All right. So this is sort of a volume profile trade. Okay. And let me give you a little context on what's happening here. So as you can see on my heat map, I have all these white bars. Disregard all that. And if you come down here to where you see the delta, as you can see, it sort of flatlines right here, and then it gets really crazy at this point. So from here to where this white bar is cut off is the start of the trade day. I started recording right at the open, and in fact I just pulled up my software, my depth of market software, literally right at the opening. So what happens is it doesn't record these historical charts with the heat map until you actually have it open. So don't worry about all this shit back here. This is from a previous day, and I'm not sure if you can see, but down here it says 5. That's the day, and it's at 26. And then if you come down here, it's 7:35. So this is a different day right here. So yeah, just needed to clear that up. So just kind of have that idea of what's going on. So as far as the volume profile goes, this right here is one of the easiest trades you can do. You still have to be pretty careful when you're doing this, otherwise things can go wrong pretty quickly. And the reason I say this is one of the easier trades to do, or strategies I should say, is notice the volume profile. Okay, this volume profile, it resets at the end of the US trading session. And everything you're seeing in here is from the European session and the Asian markets as well, or the Asian session, I should say. So everything you've seen here, this is the range it traded between the European and Asian hours. And it's relatively small for the ES. Again, the ES is going to be a US product, so naturally it's going to see a lot more volume during the US hours. And I can tell you one thing that for sure, and that's this volume profile is very short. It's going to be extended, okay? The ES is going to either come to this high, this overnight high, and break it, or it will come to this overnight low and break it, or it could go to both, the overnight high and the overnight low, and break both areas. How far it goes, we don't know. But I can tell you that on the first breakout of the volume profile is generally the safest play when it comes to volume profile breakout. For instance, if you were at the top of the volume profile later in the afternoon, it may not even break out. It may break out by a tick or two, but it's not going to just continue to run, or it could. You don't know these things. All order flow does is lets you know what may happen in the next few seconds, and from that point forward, hopefully the trade goes in your favor and you have really good trade management skills. So I'm going to show you an example of a breakout to the high and low, and how the second breakout of the day is a little different than the first breakout. again, the first breakout is usually the play you want to take, and the rules for that, at least for me, is make sure this volume profile is somewhat small, like you see here. It goes from 28.25 even to 28.30.75, and I can see the entire market on my screen. Now let me back out of this real quick. Oh, let me give me just a moment here. I'm going to connect the data. Just give me a second, because I do want to show you an example. Now, right here, the volume profile has reset itself. Okay, this is the live. This is live data coming through. It is 3:56 p.m. my time. I'm on Chicago time. Oh, there it goes. Never mind, it hasn't reset yet. I lied to you. But this is what a typical ES day looks like. Notice how the volume profile, I have to scroll throughout multiple price levels just to even be able to see everything. Notice how large the volume profile is. Look at that. Very, very large. And you can see where a lot of small contracts have traded here. The volume... This is, you know, it ripped down right here, and then it came back up, and fair market value was somewhere in here where you see this sand-colored price level. This green is the VWAP. But, yeah, so you notice how that just looks, okay? So let's go back to this. Now, as you can see that, and this is the same day. This is from today, just to let you know. So what you're about to see happen today, and what you just saw, that live session I just showed you when I connected the data, that's also today. But this is the morning right here. So again, look how small the profile is. I don't even have to scroll the depth of market. The tighter this is, the better. Now, some mornings you'll get on, and your volume profile may be super extended. Like you may have to scroll up and down on the depth of market just to see the high and the low. And if that's the case, this play is no longer going to be as valid. Okay, it's not going to work out as well. This play will work out ideally when the volume profile isn't overextended, okay? So just understand that. And if you're not quite getting what I'm telling you, rewatch this video. So without further ado, let's go into a breakout to the high. I take a trade, and like always, I'll walk you through it. So I'm cautious here. Okay, and here's the deal. I did take the trade. Now the thing is, I'm real cautious on these morning breakouts. I don't want to take it without some confirming factors. Let me rewind it, because that went quite quickly. You couldn't exactly see why I decided to jump into that. So the mornings are usually a little more violent, a little more volatile. This morning was somewhat tame compared to other mornings. And we are kind of on that rollover period for futures contracts as well. Some people don't like to trade rollovers, but you know, personally I don't care. So I'm sort of looking for what might happen here. There's no play to be had. We're in the middle of this range. The volume profile hasn't really established itself well enough to find a play. You can see me moving my mouse. I'm just sort of taking a look at everything. Trying to feel out the market and trying to feel out where can I jump in on this. Is there anything that is keying me off to a possible breakout. Now, here's what I'm noticing. Whoops. Here's what I'm noticing. Didn't mean to do that. Notice on the chart here, the price is tested up here a few times, and size did step in. It wasn't much size, but it was enough to print this gray bar here. We're starting to test this new high, and we've tested it 1, 2. Now we're on our third test. There's a high likelihood that if we can get through this level, because it is sort of a low volume node right here. If you watch my how to read a volume profile video, that'll give you a better idea of what I'm explaining when I say low volume node. This volume profile is still establishing itself right now, because I mean it hasn't even been 30 minutes yet. It's been about 7 minutes since the market opened. So even though this is a low volume node, it may not be a valid support and resistance level. However, I do notice that size was there to keep the market down, as you can see on the chart. And now we're testing that high. So this does look like a promising level to possibly get in. And you can see I got my mouse on the box. I'm considering this level. I just need to know what's going to happen. Obviously, I'm not able to get it anymore because it turned into a 400. You can see 413 flashed. That means a lot of size stepped in right here. And what happened was when that size stepped in, it boosted the market up, as you can see. So let's go ahead and play that again. And now that's sort of acting like support, which is right near that low volume node. Again, it's not quite valid. So I'm looking for a play right here. Looking for a play. Watch that 400 come in. Watch the 400 come in. Boom, boom. It just clears out several levels, and then the 400 came in. Now, here's the deal. Sometimes that 400 or some size like that will come in at the last sort of second to boost the market. The market can easily rip through that 400, or it can just magically disappear. So just because it looks like the market's in the favor of the buyers doesn't necessarily mean that order is legit. And it takes a lot of experience to kind of figure out if a large order is really valid. And here's the thing. When you're a new trader, just because you have the size behind you, it really depends on the context of when that size showed up. So I'm looking for an entry here. Theoretically, I want to get in before this high. I'm being very cautious. As you can see, I took the trade right there. I don't get it. All right? I don't get it. You kind of want to wait to see if maybe it'll come back and tap you in. Now, there's a time and place where maybe if it comes back to you, you need to cancel because it's going to rip right through. Now, one thing you can notice, my mouse is coming up to this 28.3150 level. There's this 319 on the ask, which is telling me the market may stall here. Okay? And usually when you have a morning breakout, there's going to be one quick push. It stalls, and then usually there's going to be a second quick push, and I'm seeing this 306 right here and at 28.3250, and that's telling me that there could be a second quick push up to here. And here's something weird. Here's a pattern I do notice in the ES. When you're doing these volume profile breakouts, when you're breaking out to the new highs or lows, you'll see large orders with generally about 3 ticks or so in between these price levels. So, you know, you got what is it? 1, 2, 3. 3 ticks in between these two larger orders. They're not that big, but you'll see that. And you'll see that often. And usually the one larger order is going to be the stall point, and then it'll zip up to here. So look, you notice how I put that in? That's sort of a stop order. So what that's going to do, I cancel the one order here. I put in the stop order, and that's going to act like a market order. So as soon as price trades as 256, it's going to just immediately get me in. So there it taps me in. It's not looking too good because I'm taking a lot of heat on here. Theoretically, I should be getting out of the trade because I don't like to take 2-tick losses if I can't help it. But the thing is, I got this 399 here behind me, so that's kind of a good thing. That's I'm leaning on that bid in a sense that hopefully this is a wall. And as you can see, it cranked up to 400. Now it's boosting up. Now I have the edge. I have 166 on my side versus the 101. My delta is going straight up, which is always good. Delta is buy market orders minus sell market orders, just to let you know. So we're sort of at the first stall point. As you can see on the volume profile, you have the 1761. Usually the stall point is going to be about 2 or 3 levels. And as you can see, the volume profile is very thin right here. Those are the prices that zip through relatively easily. So you're going to have that thin area where the market zips up real easily, and then you're going to have your stall point. And then it should zip up again. Now with this stall point, it can zip up and stall again, and then it can zip up again. But the likelihood of having that happen more than 2 times is really not, the odds are really not in your favor for it to happen more than one stall before it zips up, stalls, and then reverses. So it's not looking good, but I mean, that's the thing. It's going to stall. It's going to do this for a moment. I put out a target a point away. And here's what looks good. There's 1,055 market orders versus 586. And then we got the 835 versus 727. And we already had 38 print up here, but the sellers immediately boosted it down. But the fact that it sort of tested that area is good. And I'm watching the bid. I'm making sure the bid and the ask are in my favor. Boom. I tap it out, $50. I'm not sure how much further up it runs. Not much further. Yeah, it goes a little bit. But now it's starting to stall out again. Okay. And look how it's sinking in. Notice how it's sinking in like that. So this is a morning breakout. Oh yeah, look at that. Look how it just falls in flat on its face. So let's go ahead and watch that again. Really, I wanted to be on the first part of the breakout. I didn't take it. Getting in on the second leg is definitely a riskier move. But generally you have 2 legs when it comes to the first breakout of the day. So notice we have this 420 here, and it totally boosted the market down. This size sort of came up. Let's go ahead and wind it. So maybe it'll flash in and you can watch that happen. So we're going to Fast forward a little bit. So somewhere right in here, this 400 is going to come in. Watch it. Somewhere over here. You got that 300 building up. 300 building up right there. That's sort of holding it down. Bang, and it goes down. Notice how and that's what that was. That was that 300. And for some reason, when the market moves in a particular direction, you'll notice like the ask or the bid start to build up several prices behind. And really, that would be a good move to get in, to go long. When you see the market dramatically fall on its face like it just did, generally you can fade that move and it'll creep back up. So, I mean, theoretically, that would have been a good long right there. And you would want to take your profits out somewhere in here. As you can see, it's stalling. And this is why I like to record my trading day, because I can see things that I didn't necessarily see during the live trading session. I was so focused on just the morning breakout and trading the first 5-10 minutes. Generally, it can be a riskier strategy. Again, it's usually can get very violent. This is a very tame morning. So what we're looking for is an entry. I'm looking for it now. You can see the mouse is there. Looking for it. Now it's zipping up. It's starting to stall out right here. And it's ticking back and forth right here, which is a cue to get in. That's a cue for me to get in. I want it right here. That's what I want. I want that price, but I don't get it. So you can see that I tried to get in before the breakout. So I put in a stop order because I noticed that large size is sitting on the ask, and that's going to be my first stall point, which I was completely right. So that's my first stall point. It's going against me quite a bit, but I have that 425 down there that's backing me up. Now I'm managing for a breakout, only in case there isn't a second leg, because sometimes there's not, but generally there is a second push. So it's going to stall here for a minute. We're going to have this back and forth dancing. Now it's time to sort of look for a place to get out. I randomly selected a target. Generally, the second leg isn't as long of a push as the first leg. So keep that in mind, okay? So just because you can get all these ticks out of the first push before the stall point doesn't mean you're going to get as many ticks for the second push. So just keep that in mind. So that's a morning breakout trade. Yes, it continues to go up. Again, I'm not trying to milk this thing for everything I can get, because it just doesn't ever seem to really work out that way for me anyways. And the market's really struggling to hold it up at this point. It's getting real heavy. I mean, very heavy. It's really struggling. This is sort of the second stall point, even though it's about a point above. And you can see how you have over 1,000 on the bid and ask coming in. That right there, if you look at all these other market orders for the sellers, this is the line in the sand. Notice the profile getting very large right here, because it's these two market orders. You add them together to get this 31.58. So the sellers are definitely digging their heels into the ground right here. There they go, and it's at this point, it's just not valid to take another trade. So let's watch it sort of fall in. There it goes. And again, notice how it falls away. Sometimes you can get in, you'll see that quick fall, and then it'll start to slow down, and then usually you can go long and get a little bit out of it, but I wouldn't do it on this particular... I'm like trying to scroll the DOM, but I can't. Look at it just falling away. So here's the deal. Now you're at sort of the breakout level. Sometimes it'll bounce off this breakout level. So right around here you could consider a long. And you can see where the first squeeze was. Notice how low the volume profile is. You can see where the breakout happened. And then the stall point where I got in. And then the second push. And then on the volume profile you see the final stall point, which was... The volume profile is certainly larger than the second stall point. So generally, you can probably get in here, and like I said, you can get a few ticks out of it. Hell, you could have got a point out of it. So here's the deal. When you break a level, when you break a high, and that's what we did, which was right here, when you break through, don't necessarily chase the trade if you completely miss it, because it'll fall back in, and a lot of the times it'll come back to the breakout level and it'll bounce back up, and you can scalp a little bit out of it. Now it may kind of go through a little bit before it reverses. So again, you could have came in right here and scalped it as it came up, and now it's starting to stall out, so you would want to look for an exit. But I'm not sure how much higher it goes than this. Yep, it stops at that one stall point that I had the entry. So it's starting to really wind down there. Yep, and it eventually falls off, so... Let's see here. Let's go to the next video. Same trading day. This is a little bit further ahead in time, as you can see. Quite a bit has happened. We came off that high. Now we're back down here, and this is going to be... the lows. This was the low of the session, so if we notice the 56 right there. See how we have 56 here, the 429. And if you come over here, 56 and 429. So we haven't tested lows yet. This is going to be a breakout to the down, and notice how it doesn't look as good as the initial breakout. And that's why you take the first one of the day, and after that they're not as good of a play. It's not as easy, in my opinion. So I'm going to show you another $50 trade. Let me see if I can't crank up the quality. It's all the way up. So I'm just sort of watching, looking for some sort of entry. Now here's the sign. Check this out. So the sand color, the depth of market, labels it as the point of control, and there can be more than one point of control, but my software is telling me this is the most traded price of the day so far. So we get down here on the chart, and it bounces off this level we're currently at. Comes to the point of control. We go back up, come back down, and you can see it really consolidates around the point of control. Now we're coming back down to where it initially bounced, which is sort of a low volume area. I'm looking for a play right around this price level now. I want to see us break through this 28, 26, 25. Because if this is a breakout, I want to get in a little bit earlier. Kind of like I did on the breakout. I wanted to get in early, but I didn't catch it enough, and it ran from me before I could get in on the first leg up. So now we've broken that level. I'm just making sure that the order flow doesn't reverse immediately. I need something in my favor, and currently it's 200 versus 117, and that's not good. We have the 433 here. 2 ticks down, 484, 2 ticks down, 466. So we have quite a few layers of defense here, which isn't good for a solid breakout trade. Usually I want to see at least, maybe 3 ticks in between these large orders for it to be more of a valid play. But when they're layering defense every other level, that's a trickier play to take. And again, this is the second breakout of the day. It's the breakout to the low. So I'm sort of looking for... So we have that quick push up. Okay, it had a quick push up, and I decide to take the trade. I manage it. Why did I take the trade there? Let me show you. Remember what I've been explaining in the video on those hypothetical trades that I never took? If you notice, it shoots in one direction very quickly. Generally, you can fade that, and then it'll come back. And that's kind of what happened here. And here's my thinking behind this. We've broken this level, okay, that it previously bounced off, okay? And I know there's a play to be had here. I know we're going to come down and at least test where this, the low of the day or right above the low of the day. I know we're going to at least test there, and it may hold, okay? I know that we definitely are going to come up against this 28, 25, 50 where this 430 is, and I've said it and preached it in other videos. If you're seeing a large order, it's like a magnet. Generally, the price is going to want to go there, especially a large order that's been sitting for a while. Now, one that sort of flashes at the last second, that's sort of different, different context. That's a different sort of play. So watch how it ticks up. We're stalled. Boom, boom, boom. Really quick, and then it stalls out. Okay, and then we had this ticking back. Okay, just watch that price action. Watch not necessarily the numbers on the depth of market. Watch the momentum of how it moves. Okay? That's another skill you need to learn, is just the velocity of the move and the ticking back and forth. Understanding that will give you an edge in the market. It's not just reading the numbers. It's the way it moves as well. So you notice how it started ticking back and forth. And also, we had stalled at this point as well. I know I keep rewinding it, but I want you to understand why I chose to enter here. I'm not going to enter on the low. You never want to enter on the extreme low or high. The ES is very tricky in the fact that it's going to fake you out. You're like, okay, well, now we're down here. It's probably going to break out, so I'm going to get in. Now, I kind of go against what I'm saying right now on the previous trade because I did get in on the high. But there's a reason for that, because I understand what the first breakout of the day looks like. I understand that there's always a stall point and then a second push for the most part. So I understand that. But on a trade like this, the way it's moving, this is definitely going to be, there's going to be some sort of juke back move to fake people out. And there could be stop orders being put in there, and that's why it kind of went quickly. All right? So I get in at 28, 26, 50. So we're stalled here, 26, 28.50. And again, it's like I was telling you earlier, if you see that quick move, usually you can fade it and then get in. And that was a miniature version of what I was telling you. Rewatch this video on those hypothetical trades so you can understand where I'm coming. That complete quick boom, 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 whether it drops really fast or goes up really quickly, it really doesn't matter how far it goes. Just seeing that sort of price action and velocity, generally you can fade something like that. Not all the time. Not all the time. So a lot of these trades, there is no 100% strategy. Okay? A lot of these trades, you have to really understand the context, the order flow, and just the way the price is behaving at certain price levels. You have to tie it all together. It's very discretionary. There is no 100% move. Even though I know the first morning breakout generally has two legs on it, a quick push, a stall, and then another quick push, and the second quick push will never be as profitable as the first push, that's not 100% true. Maybe it has 3 pushes. Maybe it keeps going forever. You don't know these things, okay? But it's a skill-based game. Now let's watch the entry one more time, and I'm gonna let it go so you can see the profits. So it's stalling here. This looks like a nice opportunity, but I want a slight pullback. There was my slight pullback. If I see an opportunity to get in, I'm not going to get in at the extreme low or high. I want a pullback. And that was my pullback. So now it's really stalled out. But here's what's looking good for me. We got this 1,138 sell market orders versus 570. So the sellers really do want this. And then we have 645 at the next price for 760. With that many market orders printing down here, and it's 107 versus 144, I can tell you that it's probably going to go down. Now it's 126 versus 112. I know it's ticking up a little bit, but just the way it's stalled here, it looks good. Now it's sort of going against me. I'm considering, should I get out of this? I don't. That would have been my opportunity to scratch it. I'm holding firm. Now it's going against me. It's not looking too good. Theoretically, I should have scratched a trade and then got back in because now it's going against me 2 ticks. But here's the deal. Check this out. Maybe you didn't see this. Check out this 512. Notice this 500 stepped up to hold the market down. So I saw that, and that's why I didn't get out of the trade. So notice how it starts to go against me. And also, we're bumping up against the point of control, which is, I'm kind of leaning on that because that's sort of a resistant level. So I have that in my favor on top of this large order that sort of comes in. So look right in here. You got 458. Where's it at? Right on the point of control. Okay? So that is my layer of defense, and the trade can work against me a little bit. Now it's at 512. Notice how the market ticked down and then it went back up. So that's good. This is a solid defensive area that the price is going to really struggle to get through. So it's not going to just zip past it and then I just bleed out all this money. So now we're back in this level. We're back in this level. Now where am I going to take profits at? Why did I choose there? Because I'm front running the 509, and then you have another layer of defense, the 524, and then you have the 4051 tick behind that. Buyers definitely want to hold this level. And at this point, usually I would just take the money off the table and take, 2 ticks, 3 ticks out of it. But I'm willing to risk a scratch for a 4-tick win. And that's what that was. Now, let's watch how it plays out and why this breakout isn't as good as the initial one we saw to the up. First and foremost, you have 2 layers of defense here. Theoretically, you'll have 3, and they're all clustered together. That's generally a sign that they really don't want you to get through it. It may blast through it, but for the most part, it can hold. Now you're seeing this absorption here. This little ball showed up. Now notice we have a quick push up. So theoretically, you could get in here and take another scalp to the short. Remember that you'll get these quick pushes in one direction, and generally you can fade them, but not always. Sometimes there'll be a quick push, and you get in, and then it stalls, and then it continues. So you have to be quick on your trade management. So now we're coming back down. And I'm not a good enough trader to just exploit every single opportunity. I really think when I take my positions. Now we're here at the low. Notice how it's just not zipping through it. Look at that quick push up. And it's bounced several times off this level, which isn't generally all that good. Now you can see that 529 down here, and it looks like they've moved their defense down a few ticks, or that could have already been there. They're just the first 2 lines of defense got taken out. Now they're putting it right here. They get through it, and it was only a quick push through this one price level. So let me go back. Notice how it's sort of a quick push through the one price level. Really, that's not a good breakout, because we did break new lows, but if you look at the previous trade where we break the highs, it runs several more ticks than this. Then it stalls. We only broke through by a tick or so, and then it stalled. Now we're coming back down, and it's just not zipping as fast as I would like it. I know it dropped quickly, but it didn't push through that level. So theoretically, this is sort of like the first trade, in the sense that here's the first squeeze. Now we're at the stall point. There could be another squeeze and then a stall point, and then, possibly you could go short here. I don't like to do it. It's the second breakout of the day. So just the way that all worked out, and look how it's just, now we're on the other side of the stall point, and it's going to chop through here. I'm considering a trade at this point, but let's see, does it squeeze through? We're at 23.75. Yeah, it does squeeze through by a little bit. So this does sort of play out like the first breakout trade, and with the you have the quick push, the stall, and then you're going to have another sort of smaller push with some more stalling. And I'm just fast forwarding it here. Yep. So now it's starting to go back up. It's sort of found the bottom right here. So theoretically, you could play the breakout, but initially, let's go back and watch how it happens. That's the trade I took. You know, I took that off the table. I didn't necessarily want to give it back. The way it breaks out, it just doesn't have... The way it just sort of keeps stalling right here, it just doesn't look good to me. And then you had all the size right here defending it. It's one thing if there was only one price level that had a lot of size and the others were average. And then also you had that absorption come in. So if it didn't look good to me, could you have taken it? Yeah, you could have. But it wasn't as easy as the first breakout trade. The first break was a little smoother. And usually you're going to want to definitely try to get in before the breakout happens. So it'll test that level and then it'll bounce up and you're going to want to try to get in. So we'll watch it. Let's fast forward here. So just the fact that we have this 407 only one tick below the new low, that didn't look good to me. And we just keep bouncing off the low. That's generally not a good sign. Sometimes it can just straight up reverse. But if you want to play it, you want to make sure you get it when it bounces back. So we clear out that one price level really quickly. It sort of stalls here. And then it backs up. Not the best sign. And this is sort of our first stall point. Right in here. Notice the back ticking. Now you're starting to have a lot of size build up as far as market orders go. So if you're going to get in here, this is a lot riskier. You're going to only want to scalp it for a little bit. And now I do say that large size acts like a magnet. Don't be fooled by this 614 down here. Just because you see it down there doesn't mean it's going to go there. Trust me, I've fallen for that one a few times. So as you can see, just the way the price action looks on there, it's not as nice as the breakout to the high here. Let's watch this one again, and then we'll shut her down. So this is the first breakout of the day. These are the more valid plays. So that other one was the second breakout. This is the first. Just watch how much more smooth the first breakout is. Trying to get in early. I want to get in early. I want to get in early. You always want to get in early. Try to get in. Don't get it. Look, we're not having like aggressive slamming back down Notice how we broke the high, and we just sort of broke the high. We never had that ticking back like the breakout to the low. And just it's so much quicker, it's smoother. Unlike the breakout to the low, it kept bouncing, 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 right? When I see a lot of bouncing, that tells me this level may hold. Unlike this trade straight up just sort of ripped through it. This was smoother, quicker, no struggling. This is why the initial breakout, if the volume profile is sort of small, is always usually a good play. And when it comes to the second, the third, the fourth breakout of the day, you have to be a little more careful. So hopefully you learned something from this video, and we'll see you on the next one.